Hello everyone. In this session we will be seeing what are the treatment or what is the treatment of GST in accounting. Now, treatment of GST in accounting is nothing but to see how much you have collected GST and how much you have paid GST while purchasing goods, and if there is any remaining GST amount that is left with you, then you have to return it back to the government. So it is in GST you have to do nothing but you have to see how much GST you have collected, how much you have paid, and if there is any extra in your hand, then you have to pay it back to the government. And for doing this, we have to pass journal entries for various GST. Now let us see at what time we have to pass journal entries related with GST. Now the first case is intrastate supply. As we have seen in our previous session, then that there are two types of supply of goods and services. One is intrastate, another is interstate. Now first we will talk about intrastate supply of goods and services. Intrastate supply of goods and services is nothing but means the sale and purchase is taking place within the same state. In that case, what we have to see is that how much is the CGST and SGST. Okay, now let us see when we purchase goods from within the same state, then in that case while purchasing we have to pass journal entry. Normally in our journal entries we saw that purchases account are debited and cash account or bank account or creditors account are debited according to the nature of the transaction. If it is cash transaction, then cash account or bank account will be credited, or if it is credit transaction, then creditors account will be credited. Now in addition to the purchases entry, what we have to include in GST is that we have to include input CGST and input SGST. We are talking about intrastate supply, and while intrastate supply we have to consider both CGST and SGST. Now since we know that while purchasing goods, goods are coming inside our business, so the GST, that is CGST or SGST, that we pay is nothing but our input CGST and input SGST. Since it is kind of an expense, so we will debit both the accounts. Suppose if the GST amount is 12%, then CGST amount will be 6%, and SGST will be 6%. Then we will credit bank or creditors account as per the requirement of the transaction. And next is while selling goods. While selling goods, what we do is that we collect GST from our customer. So in that case, normal journal entry will be bank account debit, cash account debit, or debtors account debit to sales account. But in GST, including to previous sales transaction, what we have to do is that we have to credit output CGST and output SGST account depending on the rate of the GST given in the question. So the journal entry for sales will be this point number 2. Then suppose if we return any goods after purchasing, then what we have to do is that normal journal entry would have been creditors account debit to purchases return account. Since in this question we have GST also, then in that case we will credit input CGST as well as input SGST account. Now in case of purchase return, input CGST and input SGST accounts are credited because at the time of purchases, means while we purchasing we debited those input CGST and SGST accounts. So while returning goods, the reaction will be opposite and we have to credit input CGST and SGST. Same with sales return, means we will debit sales return account, we will credit debtors account, and we will debit output CGST as well as output SGST, because while selling goods to the customer or to debtor, at that time we credited output CGST and output SGST. Now when we purchase fixed assets, if we purchase any fixed asset, at that time also what we are doing is that we are paying GST, CGST as well as SGST. Now in that time we will debit fixed asset account, we will debit CGST, input SGST, and we will credit bank account if we are paying the amount by check. Then for any expenses that we make on any goods or any services, at that time we will debit expense account, we will debit input CGST and input SGST, and we will credit bank account. For income, for example, commission receipt, if we receive commission, on that also we have to when we receive any income, for example, when we receive any commission, at that time, since we are receiving the amount in our bank, we will be debiting bank account. And since commission received account is our nominal account, so according to nominal accounts rule, we will credit commission received account, and we will credit output CGST, output SGST as well. Now if some of the goods are withdrawn by proprietor for his own personal use, at that time naturally we will debit drawings account, we will credit purchases account. But for purchasing those goods also we had paid GST, so in that case we will credit input CGST and input SGST while withdrawing the goods. Now if suppose we have given away goods as free samples, or we lost some goods by fire or theft, at that time what we will do is that if we have given away goods for free samples, then we will debit advertisement account. If we lost goods by fire or theft, then we will debit according to the condition, and we will credit purchases account as well as input CGST and input SGST account. Then now after making all the entries related with various transactions, at the last what we have to do is that we have to see how much amount of GST, that is CGST and SGST, we have collected, and how much amount of CGST and SGST we have paid while purchasing goods. Okay, similar obviously in a business you are going to purchase goods from your supplier, then you will sell those goods to your customer. So the amount that you while purchasing goods from your supplier, you pay GST. But when you sell goods to your customer, obviously the selling price will be more than your cost price, so amount of GST that you collect from your customer while selling goods to them will be more compared to the GST that you have paid earlier while purchasing those goods. So the remaining extra GST that you have with you is not your income, but you are supposed to pay those extra amount of GST to the government. So that we have to find out, and for that we have to pass few journal entries. Now let us see what journal entries are those. Now first we will deal with input CGST and output CGST, that is central goods and services tax. Now output GST is nothing but GST that you have collected, we will debit that account. Then we will find out input CGST, we will set off against output CGST. Then we will come to input SGST and output SGST. First we will deal with CGST and then we will come to SGST. At that time we will debit output SGST, then credit input SGST. Now after setting off the required or the remaining amount that we have, that is remaining output CGST as well as remaining output SGST, both the account amount we will write in here in debit column, and we will credit bank account, because through bank only we can pay those extra GST amount that we have in our hand to the government. So we will write on the credit side. Now I haven't taken any practical question for explaining since this is not included in your syllabus, but still if you want, then you can go through over your illustrations in your book, and if you have any doubt or if you want to practice further, then you can let me know and we can take up any practical question. So this is all about GST in accounting. Now from our next session we will be starting cash book. So for this session we will wind up here. Thank you.